So, dear professors, we have been able to discuss 5 of the books of accounts, specifically the day books, i.e. the sales day book, purchase day book, return inwards day book, return outwards day book, and the cash book. We need to deal with the petty cash book, and we would have the general journal to finalize our discussion. So there you have the petty cash book. In simple English, then petty means small. So this is like a small cash book. What is it? Please, Prof. Kujo, can you read what we have on the screen for petty cash book? Oh, I think Prof. Ken Taki, please, can you do the reading for us?
Petty cash, it is a subsidiary book prepared by a petty cashier to record cash received from the main cashier and the small expenses such amount and the small expenses such amount is used to cater for. It's a debit side. It has a debit side that records receipt of money from the cashier, and the credit side that records payments of petty expenses.
Thank you very much. Thank you very much, Prof. Kentucky. So you see, the name cash book there suggests you that it is used to record receipt and payment of cash, right? As we saw in the main cash book. But here, the specific receipt is coming from the main cashier of the business or the main accountant. Okay. And the payment is for all the small expenses that are incurred during the normal course of doing business. Now, we call them small or petty expenses because these are expenses that reasonably you don't get receipts for. Example, I don't think you sit in a trotro, or let me even say a taxi. You are moving from your house to maybe a junction and you ask the taxi driver to stop driving and write a receipt for you that you have paid 350 pesos for the journey. You should give your receipt. I'm not sure you are going to get anything like that. Well, you can speak about when you go to the main station, you get a ticket. That is even a ticket, not a receipt, right? Anyway, so businesses incur small or petty expenses most of the time that we don't get receipts to cover. Okay, so the main accountant most of the times, at least, want to focus on the major, transactions involving huge cash or check amount. Okay, so imagine the main account having to pay for, maybe 2 cedis for transport. It doesn't make sense. So the main job of the petty cashier is to take care of these small expenses as I've outlined: transportation, printing, postage and delivery, cleaning, etc. Now, because there are 2 parties in the picture, i.e. the petty cashier and the main cashier, they agree and operate a certain system. And that system is called the impressed system. Professors, fortunately for us, our parents operate this system with us some way, in one way or the other. How does that happen? I want you to all to remember how your parents operate your chop money with you. So I want to pick few reactions before I digest the impress system. So, Prof. Zoe, what is the arrangement you have with your parent about your chop money when you go to school? How is it done?
Good morning, sir.
Good morning, Zoe.
So, sometimes the money is given to the house mistress,
Okay,
and they expect her to give us a certain amount of money
okay,
for a week.
okay. Great, great. Thank you. Let me pick the last one from Emil. Or could you, are you available now to share your opinion? Please unmute. Okay, maybe you is having some challenge. Prof. Nadum, how is yours done?
Preferably, when I'm going to school, they give me the money. They leave how I'll spend it to myself. I decide how to spend it. And when it's finished, I call and they send. Yes.
Thank you. I love the part where you say when it is finished, you call. Okay, so the impress system behaves like the way we go about our chop money. Now let me share mine. When I was in the secondary school, I was a day student, but I was staying um, away from my mom in a different town. So what happens is that my mom has a fixed amount she gives me for every week. I think at the time it was around 60 cities, yeah, 60 cities for the week. Now I will spend that 60 cities from Monday until Friday. And then when I return home, she will ask me, how much is left? If I tell her I have 5 cities remaining, the following week she's only going to add 55 cities. So if you are following me, you get the sense that I had a fixed amount that I always have to keep as my job money, which is 60 cities for the week. If I go home and I have some of that monies left, she's not going to give me another 60 cities. She's only going to give me the total I have spent, so that when I add on to the balance, I always go back to my job money 60 cities. Professors, my mother was teaching me the impress system. I didn't know at the time until I was taught in the classroom. So the impress system is a system where you are given a fixed initial amount, and that amount is called cash float. Okay, that fixed initial amount is called cash float. In our case, that's the chop money. That is what you are going to use to pay for that small expenses or petty expenses. Now, you are only going to be reimbursed. Now, note the key terms. I'll come to them. When I say reimburse, it means you are going to be given back. You are going to be given back only the total you have spent. The total you have spent. So that when you add on to your balance, you would always go back to your initial cash flow. And that's the impress system. So let me read it. This is a system where a petty cashier receives an initial amount called cash float from the main cashier to be used to cater for small expenses. And periodically, based on certain conditions, the petty cashier is reimbursed with the total amount spent over the period in order to restore the cash flow to its original amount. Now, some of your parents are not implementing this system well. So what they do is that, for example, they give you 100 cedis. When you go to school, you spend the money. The next time they give you another 150. That is not the impress system. The impress system is operated such that always you have the fixed cash flow in the system running. So when you spend, you only ask the main cashier to give you back what you have spent, so that always, you see, it's like a cyclical system. Let me get my pen and then I can write something down. So for example, if your float is say 100 cedis, so this is what you are going to be spending on your small expenses. Let's assume maybe by the third week of the month you have spent 80 cedis. What it means is that you have a balance of how much? 20 cedis. Under the impress system, you are only going to be giving back the 80 cedis, so that when you add it to your balance, you get back to your original cash flow of 100 cedis. Okay, I think there's a question. Let me take that question. Augustine, please, let's hear you.
Sir, please, what if there is no balance?
Of course, if you spend the money and it gets to zero, definitely it cannot go to negative. That is not a possibility, because it's money that you have in your hands. At best, you spend and it will be zero. So if it's zero, then you are definitely going to be reimbursed how much? In this scenario, 100 cedis. So what I want you to understand is that you are only reimbursed with the total amount you have spent at all times. But as to how you are reimbursed, it is determined by the main cashier. Because I know some of you, your parents say every 2 weeks or at the end of every month. Right? So even when you have not exhausted your cash float, at the end of every month, they call and ask you, Usikana Akaze. If you say 95, say okay, and then let me add 5 cedis so that I get your. But most of your parents don't operate the system judiciously. So even when you tell them, oh, I can 95, they will say, okay, they send another 100 cedis, making your total 195. No, that's not the impress system. Any other question? Okay, yes, Josephine, let's say.
Yeah, please. So are you saying those of us that parents don't do the impress system is a bad thing?
Oh, it's not a bad thing, but probably I would say that cannot be described as an impress system, right? In a business sense, it will be a bad thing, right? Remember, your parents are not seeing you as a business. But in a business setting, it will be a bad thing if, for example, you give somebody 100 cedis to spend, right? The person has spent, let's say, 20 cedis. It's left with 80 cedis. Then you go and give the person another 100 or give him another 200 cedis. When you do that, it becomes difficult to track. And some of the staffs may be abusing that system and be squandering money or causing fraud to the business. So the interest system actually is to check some of these things. So we give you a fixed amount. When you spend, we only give you how much you have spent, so that always that fixed amount is what you are running or what you are using to pay for the small expenses. That's the rationale. So never in any way is it bad for a parent to, you people, sometimes you have not even spent the money, but when they call you, say, oh, dad, the money is finished. Oh. So if you take it, you go to dining and spend, you chop dining Monday to Friday. When they call you, say, oh, dad, the money finished last week. Oh. Then you take it. That's what you gather to buy the phones. I hope none of my Omega professors will do that. It's an illegal material in the system. Don't take it there. You'll be in trouble when you are caught. Okay. So please, Josephine, it's not a bad thing in the case of a parent-child relationship, but in a business setting, we want to operate this system judiciously, and that's the impress system. If you understand it, fine. It is examinable. You can be asked to briefly explain the impress system. You can see on the screen that I've underlined some key terms, right? Or key phrases. So this is a system where an initial amount called cash float is given to the petty cashier to be used to settle small expenses. The petty cashier is reimbursed. This reimbursed word, if you don't bring it, you lose a lot of money. Is reimbursed with the total amount spent in order to restore the cash float to its original amount. That's the impress system. And this is the system that the petty cash book operates on. Any other question apart from that from Josephine and Augustine? I know some of you, your parents judiciously operate this system with you. So when they give you the job money, they tell you, call us when your balance is running out. And when you call, they only give you how much you have spent so that you go back to your original state. And you can all agree that that will be a systematic way of checking how your child is spending. Yeah. Okay. So let's move on. Now let's look at the format of the petty cash book. So it has a debit side and a credit side. Professors, the debit side is just the receipt column, as you see here, right? As usual, you have your date and details. Now the date and details runs through for the debit side and the credit side. Your credit side is from this point. That's the total column to the expenses column. Remember, we are spending on petty expenses like printing, stationery, postage, cleaning. So those expenses are what you have to open their columns. And then the last one, which is a ledger column. That ledger column is used when you are paying a creditor whose balance is very small. Okay, so it could be Kofi Ama, ACXY Limited, whatever. For them, you put them under the ledger column. Okay. So let's see if we can take an illustration and prepare the petty cash book. I'll be glad if we finish that, and then maybe I'll give you one to deal with whilst I go to check on the business management paper. Is Portia here, or Portia is absent today? Portia is not here. Let's move. So before we look at the examples, some of the conditions under which the reimbursement will be done. Some can say when the balance falls below a certain amount. So some of your parents tell you, they give you 500, they tell you when your money is about reaching the 100 cedis threshold, call home so that we send you your monies. Some will say every 2 weeks, every fortnight. Right? Some will do it monthly, some will do it whatever. And then the last one, which most of the time is not given, is when the balance on the cash float cannot settle the next expense. So imagine I've given you 100 cedis to take care of small expenses. You have used it, your balance is 5 cedis. And you have to buy a notebook which is 15 cedis. Can you go and buy the book? No, because the price of the book is higher than what you have on you. So you'd have to call me to reimburse you before you can buy the book. Okay. So let's take the first question. So we have the following relates to Joanna Enterprise, March 2029. First March, received from the accountant 120,000 as cash flow. Then on 2nd March, we bought pens. On the 5th, traveling. 6th, office cleaning. 7th, pens. 8th, nails. 16th, office cleaning. 19th, pens. 25th, traveling. 30th, pens. You are required to prepare the petty cash book. So let's look at the suggested solution. So professors, you put down your format, right? So the name of the business is the first. You are preparing the petty cash book. We have discussed the column. The first column is the receipts. The second is the date. The third is totals. And the remaining are the expense column. We call them the expense analysis column. Okay, let me shape in this solution so that so let me see if we can start fresh with the format being laid down. So professors, the first thing you have to record is the receipt, how much was received from the main cashier, right? Because if you don't record the receipt, you cannot continue to spend. So we're told that we received the money on the 1st of March 2019. So that will be under our date column on the 1st of March. We already have our March 2019 there. What will be the details? This is the cash float you received from the main cashier. You put this money under the receipt column, 120,000. So always record the receipt. Now, there are some questions. There will be an opening balance. Okay, so you bring the opening balance brought down. Then looking at the cash float the petty cashier is keeping, you add on so that you get to your original cash float. We will solve a question like that, so no worries. Now, after recording your receipt, you go on to spend. But you have to be careful. What are the conditions for reimbursement? In this question, we're not told anything. So it means that as we spend, if we get to a point where the money cannot cover the next expense, we have to stop and reimburse. Now, at that point, professors, what you do is that you balance the petty cash book with your carry down, brought down, and then you give the cash float, which is the total which has been spent. Then you move on. So let's see how you do. So on the second, we bought pens, 16,000, right? So on the second, we bought pens. Now look at it. For the expenses, you first put the amount at the total column before you now locate the particular expense and put it there. Now, how did we arrive at these expenses column, professors? We just go through the question and you would know that. Look at the expenses that you have. Pens, traveling, office cleaning, pens, nails, office cleaning, pens, traveling, pens. So you know pens will be one of your expenses, traveling will be one, office cleaning will be one, and then nails will be one. If there was any person in it, AMA, AC, or whatever, then you would have also added the leisure column. Okay, let's move on. The next date was on the 5th, traveling, 14,000. On the 5th, traveling, 14,000. First, under the total column, then you locate the traveling expense column and put it there. Okay. Please, any question? The next was on the 6th. 6th was office cleaning. Let's look at the amount involved. Office cleaning, 20,000. So you put it under the total column. Oh, sorry, 50,000. No, 20,000. And then you go under the office cleaning expense column. And you put it there, 20. Now, professors, as you are spending, you have to check the balance. Okay. So look at it. We have 120,000. We have spent 16, 14, and 20. That is a total of 50,000, right? So we have, if we subtract, we have 70,000 to spend, which can cover the next expense. That's on the 7th, pens. So we go on and spend. So on the 7th, we have pens, 50,000. So we go under pens and put it there, 50,000. We now have spent 100,000, right? Because this is 16 plus 14, 30 plus 20, 50 plus 50, 100. So we have 20,000 remaining, which can cover the nails expense on the 8th. But you see that after covering the nails expense, our balance will be left with 8,000. The 8,000 cannot cover the office cleaning on the 16th. So it means on the 8th, we have to reimburse before we can spend on the 16th. So let me go and record on the 8th. So on the 8th, we spent on nails 12,000. So that'll go under the nails column. Now, the remaining balance is is 8,000, right? But our next expense is 50,000. So it means we have to stop and get the reimbursement before we can continue to spend. So professors, let's meet in the second session. I'll show you how you do the reimbursement, and then maybe we'll call it a wrap, and I'll give you more illustrations to solve. Thank you very much. If you have any question when we resume, please hit me up with that question.